Dell just dropped an absolute bombshell on Wall Street, starting with the most massive focal point. Total revenue hit a blockbuster $33.4 billion, surging 39%. From this massive top line, the cash flow splits into two engines. The Client Solutions Group brought in $13.5 billion, completely swallowed by the Infrastructure Solutions Group, exploding to $19.6 billion. The burning core of AI-optimized servers detonated with $9 billion, marking an insane 342% growth rate. Look at how they squeeze this cash flow, retaining $6.8 billion in gross profit, ruthlessly suffocating operating expenses at $3.3 billion, generating $3.5 billion in operating income, and securing a clean $2.6 billion in pure net income. The final fatal blow, EPS hit $3.89, utterly crushing the market's $3.53 estimate. You are witnessing one of the most brutal structural pivots in tech history. Look at the revenue trajectory stretching across the quarters. The client segment is sliding with a negative 6% compound annual growth rate, now acting merely as a defensive stabilizer. But the landscape has completely flipped, plowing ahead with a blistering 20.8% CAGR. The infrastructure segment has officially become the absolute profit engine. Global IT budgets are being drained into AI infrastructure, leaving all traditional demands in the dust. Dell has permanently shed its aging image, reincarnating as a behemoth manipulating the world's computing grids. Hold your breath for the most explosive core, AI servers. Looking at the order flow, a terrifying acceleration has taken place, ripping through all records to hit $34.1 billion in a single quarter. This insane order volume instantly pushed shipped revenue to a peak of $9 billion. But the most terrifying coiled spring is the pending backlog, skyrocketing to an unfathomable $43 billion. Looking at the annual growth trajectory, this machine expanded to $24.7 billion and confidently locked in a $50 billion target for the next fiscal year, an unprecedented 100% year-over-year doubling pace. This absolute power is backed by an invincible ecosystem, gathering the greatest minds from NVIDIA and AMD to Hugging Face, Meta, and Gemini. To digest this massive $50 billion workload, Dell unleashed the most comprehensive portfolio for large-scale AI deployment. Any rack, any cooling, and any platform. The pinnacle of the pyramid is the ultimate performance-exclusive segment, featuring comprehensive liquid cooling. Next is the extreme performance tier adhering to OCP standards. Following that is the high-performance system, flexibly combining both liquid and air cooling. This entire machine is delivered as a turnkey solution through assessment services, custom rack integration, and one-call support. On the brutal raw infrastructure battlefield, Dell is imposing absolute dominance. Mainstream server share is witnessing relentless momentum, locking in the current 29% mark, leaving rivals drowning at 15 and 10%. The data center upgrade drive is fierce. 16G servers deliver 2.5 to 3 times more processing cores. Advancing to the 17G generation, processing power leaps 4 to 5 times. Power efficiency surges 175 to 235%, easily replacing 5 to 7 legacy servers. The storage battlefront continues to erupt with 24% in external RAID, crushing with 35% in high-end, and taking the lead in both mid-range and AFA. Specifically, the PBBA segment established a monopolistic 41% milestone, flattening the closest rival at 14%. This strength shoulders massive enterprise AI workloads via the Dell Data Platform, from Data Lakehouse to the hyper-fast Project Lightning. And finally, here is the lethal closed trap, the Dell IP portfolio. Core data is tightly locked by PowerMax and PowerStore. The foundation is entirely software-defined via PowerFlex, shielded by Data Domain. The entire ocean of unstructured data is swallowed whole into PowerScale and ObjectScale. The principle here is data gravity. Wherever the data lives, compute must follow, generating an endless stream of super profitable recurring cash flow. Stepping away from the supercomputer frontline, global PC shipments are painting a highly volatile cycle. Having witnessed a decline due to the rise of tablets, the entire market then violently exploded with 349 million devices as the remote work wave swept the globe. Entering the current 2025 milestone, the scale locked in at 271 million units. In this cutthroat race, Lenovo leads with 74 million units, closely tailed by HP at 57 million, and Dell holds the fort in the top three with 41 million devices. However, do not let the top-line numbers fool you. Dell's true cunning lies in the segment mix. While the rest of the market, including mainstream and Chrome, is bleeding out with a negative 1% unit CAGR, the commercial premium segment is blooming at a 7% pace, inflating to capture a full 26% of the market pie. Dell directly suffocates this apex tier with a 27% market share, leaving behind the miserable 10% held by the rest of the market. They are monopolizing the absolute fattest layer of the PC industry. This is the flawless strategic blueprint shaping the AI infrastructure evolution. The system is absolutely compartmentalized. The ISG division spearheads as the profit engine, while CSG acts as the stabilizer, underpinned by the quiet efficiency philosophy optimizing costs ruthlessly. The convergence point is the AI growth engine carrying a $50 billion target, capturing a full 35% of total company revenue. This raw power is fortified by a $43 billion backlog, solidifying into a 20% global market share. The financial trajectory is launching straight into the stratosphere. $140 billion in revenue, $10.7 in EPS, fueled by a massive $10 billion share buyback program. Look back at this skyrocketing journey. The $50 billion mark demands a 100% year-over-year acceleration, doubling the previous year's achievement. By shaking hands with an invincible ecosystem spanning from NVIDIA, AMD, and Meta to Hugging Face, Dell is completely manipulating the global AI arms race. The true arrogance of Dell lies in their quiet efficiency philosophy. Despite burning cash for hyperscale infrastructure, Dell's operating expenses are suppressed flat with absolute ruthlessness. Looking at the selling, general, and administrative and research and development columns, they are strictly locked between the $3.5 billion to $3.6 billion range across a series of quarters. Revenues surged nearly 40%, yet expenses barely budged. They achieved this through cold-blooded automation and restructuring to fiercely protect free cash flow. This ruthlessness in cost management instantly triggered a nonlinear profit leverage. Along with the revenue breakout, Dell's net income margin curve inflected sharply upward. From the days of struggling at the 1 or 2% mark, this machine executed a razor-sharp pivot, hitting a peak 7% net income margin. It squeezed out a colossal $2.3 billion in net income, acting as the absolute testament to their capability to maximize super profits on every single unit shipped to the market. In the financial world, the dominator is the one who perpetually shatters estimates. The actual revenue milestone of $33.4 billion this quarter stood tall, completely blowing away the timid $31.7 billion estimate from the Wall Street elite. Look at the projected pillars for the upcoming journey: $34.5 billion, $34 billion, and shooting up to $36.1 billion. Dell has turned the act of crushing expectations into a mere mechanical habit. Revenue is a promise, but EPS is the cold, hard cash falling into shareholders' pockets. The reported profit column utterly flattened the estimated column. Non-GAAP EPS surged to $3.89, leaving the expected $3.53 in the dust. The journey from the $1.31 mark has now morphed into rocket propulsion, and projections for the next phases continue to break all market hesitation, targeting the massive $3.83 mark. With a super cash printing machine like this, how is the financial elite valuing Dell? The consensus is absolutely overwhelming. Looking at the ratings from 26 analysts over the past 3 months, the sentiment is heavily bullish. 13 analysts are screaming strong buy, backed by another 5 locking in a buy rating, leaving only a single outlier pushing a strong sell. When we map out the 1-year trajectory, 17 analysts offering price forecasts have pushed the average target to $167.94, unlocking a solid 12.55% upside from the current $149.21 level. But the real euphoria lies in the maximum estimate. The most aggressive Wall Street scenarios expect this stock to skyrocket to $220, projecting a massive 47.44% growth explosion. Meanwhile, the absolute floor is currently modeled at a minimum estimate of $110, representing a 26.28% downside risk. Please remember, the views expressed in this video reflect opinions at the time of publication and are based on sources believed to be reliable. This content is strictly for informational purposes only and does not constitute investment advice. Hit like, subscribe, and drop your own price targets for this Dell masterpiece in the comments below. See you in the next video.